Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, July 16th, and you're tuned into On Trend, the show, of course, designed to keep you on the right side of the trend. So small caps and mid caps are not on the right side of the trend as they stall out. Semiconductors are getting on the right side of the trend, but the individual stocks are a little mixed. We'll look at home builders, and finally, we'll finish with some curated stock charts. So we're going to start off with the big four. We're going to look at large caps, SPY, large cap techs, QQQ, mid caps, MDY, and small caps, IWM. These are the big four major index ETFs, as I would call them, because they pretty much cover all the bases that we need to cover. Now, if we look here at SPY on this chart here, you'll see at the bottom in the indicator window, I've got the 10-day rate of change, bottom left there. And you can see it's at 2.65%. So that means over the last 10 days, SPY is up 2.65%. Also for the chart attributes, I've checked the box to show the y-axis labels, so I can see that 2.65% as well. And of course, there is the line for the 10-day rate of change. Now, what's interesting here is if you see since early June, this 10-day rate of change turned positive and remained positive. So that means on a rolling basis, every 10 days, the S&P 500 SPDR has not been negative. So nobody suffered a 10-day loss, if you will, for over a month now. And that's a fairly good stretch. You can see there in May, we had a little less than a month, around a month, a month, where we were negative on a rolling 10-day period. Every 10 days, each day, the 10-day rate of change was negative. But now you can see here we are positive. And that, of course, is reflected on the chart because we've got the surge and then we've started moving higher, but at a slower rate of change. Along the way, we've had, a stall there in mid-June, a little pullback into early July, a smaller pullback in mid-July, and each one ended with some sort of a breakout and a continuation higher. So SPY continues to work its way higher. I see nothing negative on this chart. The only possible negative is that you're overbought. But remember, short-term overbought means you've had strong buying pressure, and that is medium-term bullish. So if we scroll down now to QQQ, we've got the same indicator there, the 10-day rate of change, and it's at 3.97%. We'll call it 4%. And just like SPY, you can see that rolling 10-day rate of change has been positive for over a month now as QQQ works its way higher. You got the initial surge, and then you had a little bit of a pullback, surge, little consolidation, surge, little pullback, and another surge to a new high. So large caps are leading. Now it changes a little bit because now we get to small caps, and I'll have mid caps next. I'm not going in the exact market cap order here, but there you can see the 10-day rate of change is negative. It's just down a fraction IWM, and you can see that was the case there in the latter part of June as well. Of course, when that 10-day rate of change turned negative, that's when we got a surge there, that big 3-day surge. Now, if I look at this chart, you can see IWM has kind of gone nowhere. All right, it's been chopping around above and below that 154 level since February. You're above it, you're below it, you're above it, you're below it, you're above it. So right now, the last thing we've got here is this big surge and a little consolidation. And you can see we've hit resistance a number of days over the last 8-9 days here in that 156.5 area. So we need to get a breakout here to get small caps back on the upward trajectory because they have stalled out over the last 2 weeks. Now this next chart here is MDY, and it of course is the mid-cap ETF, and you can see it's up a fraction. but for all intents and purposes, it is unchanged over this 10-day period. Now, before we look at this current falling flag wedge thingy, look back at March. Okay, March, April, you had this big surge, went above this resistance zone, and you consolidated. And you can see broken resistance levels turned into support. So you're at the top of a support zone here. And if you had been looking at this chart here in the early part of May, you would have seen that big gap and surge off that support zone. And that would have been a bullish indication. Then it had a weak open and a strong close, so we're still okay. And then we had this decline here, that black candlestick, but we're still at this support zone here that's been tested in the latter part of April and early May, but then we broke down below it. So this was a bull flag basically that didn't work. Not all patterns work, it's just the way it is. So you can see here, if we look at MDY, you can mark a support there at say 352, and if you break it, then maybe we get some sort of a pullback here. But, you know, the bottom line is large caps are leading. Large cap techs are really leading. If you look at the tech-related ETFs, a lot of them are hitting new high, like software and cybersecurity. And we're going to focus on semiconductors next because semiconductors are staying strong here. But small caps and mid caps continue to drag their feet. I'm not impressed with banks. Okay, insurance looks good. Brokers, dealers, looking okay. Goldman Sachs had a big move. But if you look at KRE and KBE, they don't look that good. And financial services is a big part of the small cap ETF. Now, I realize the finance sector has showed some renewed strength overall, and that's as at the sector level, XLF. And the way I track the sectors, I like to look at the internals. And I'm going to show you two internals now, and that would be high-low percent, which is new highs minus new lows. So that's net new highs divided by the total number of issues. And when you get that as a percentage of total issues, net new highs, then you can compare it against the other sectors and the other indexes. So what I've got is I've created a chart list, and it's got all the high-low percent indicators that I like. So if I click Edit List, there you can see all the symbols that I have put in this one chart list. And once you make a chart list, you can view it as in different formats. And I'm going to click Summary Format there. And that's going to show me all of the symbols as well as the value. Now, I'm really not interested in the percentage change. What I want is the close here. And so if I click that column, I sort by the close, and I get the highest high-low percent readings at the top, which would be the sectors with the most new highs as a percentage of the total issues. And if you look at this, look at the three top sectors. All right. What we have here is we have finance, consumer discretionary, and technology. And all three of their high-low percent indicators went above 20%. So that is meaning roughly that over 20% of the components in each of these hit new highs. Each of these sectors has over 60 stocks. They're three of the biggest sectors in the S&P 500. So the technology sector, I'm going to go over to the SPY website here, and you can see that the technology sector is a whopping 21.7% of the S&P 500 SPDR. Financials come in at 13%, and consumer discretionary at 10.4%. So that's like 45% of the S&P 500. So that's important when you can see that these three big sectors are leading. So going back to the table, you can see the other leading sector for high-low percent is the consumer staples SPDR. And I've never been of the argument that it's negative for stocks when defensive sectors lead, like staples, utilities, and REITs. It's only negative for the stock market when you see those big sectors leading or moving lower. All right, consumer staples around 7% of the S&P 500. So you add that to the 45% from the first three, and you've got 52% of the market leading there by getting more highs than the S&P 500. There's the S&P 500 as the benchmark, at 13.6% for high-low percent. So there's clearly enough strength throughout the market to say we are in a bull market. Now, another indicator I like to look at is the percentage of stocks above the 200-day for the sectors. And again, I've got a chart list here, and what I've done is I've sorted it by the percentage of stocks above the 200-day EMA for these. And there you can see the top sectors: utilities and technology, 96% and 88%. Then finance at 79%, REITs at 78%, communication services at 77%. So we can see that technology is leading for high-low percent and for percent above the 200-day, as is the finance sector. So that's pretty positive for the market when these two sectors are showing some upside leadership. And there you can see discretionary. It's still not doing so great in the percentage above the 200-day EMA category, but it is above 50%. It's above 65%. So there's more uptrends and downtrends in the consumer discretionary sector, but there are a lot of pockets of weakness in that sector, especially retail. So now turning to the semiconductor ETFs. Now there's a big difference between the SOX, SOSX, Semiconductor iShares, and the XSD, the Semiconductor SPDR. If you look at the top holdings for SOX, you can see that we've got NVIDIA, Texas Instruments, Broadcom, Intel, and Qualcomm, each over 7.5% weighting. And the total is there at 60% for the top 10. So this one is heavy on the large cap semiconductors. And NVIDIA is one of the weaker ones of the group. And Intel, the chart doesn't look that great either, nor does Micron. So they're weighing on it. We'll look at that one in a minute. But if we look at this chart, we got the reversal alert zone there. When we got a reversal off of that, you can see the 50 to 62% retracement zone. You can see support there. You can see broken resistance turning into support. So we got our big reversal there, and we're continuing higher. We're still below this high, but as long as this one holds 195, I think this uptrend is in place. And until we break 195, I would not be concerned about this advance. Now let's look at the top 10 stocks. So again, what I've done is I've created a chart list, and I've named it the SOX Top 10. And there you can see the name and all the options available. And there are the top 10 stocks for the SOX. And once I've got it in a chart list, there are a lot of things I can do. View as, I can do a summary, 10 per page, candle glance, relative rotation graph, or market carpet. Now, I'm a chart guy. All right, so I go with candle glance because I just like to see a chart. That's pretty much all the information that I need to make a decision about something. But you can quickly see which ones are the leaders and which ones are the laggards. And there you can see NVIDIA. It's still below its falling 200-day moving average. It's still below that April high. So it's the weakest of the group here. Micron just got back above its 200-day, and it's back near the spring highs. So it's doing all right. You look at Intel. Man, look at that decline. It came all the way down to a support zone there and really surged. So it's back in business, but it's not the best looking uptrend. If I have to pick the best looking uptrend on this chart, it would still be Broadcom, because you can see there from the summer you had a higher low. You had a higher low in October. You had a higher low in December. And we got that big selling in May, but we ultimately formed a higher low. And so this one is continuing to work its way higher. You look at analog devices. All right, there's the breakout zone turning into support. You can see that this decline was probably around 50 to 62%. And we got the surge, and it just did hit a new high. So it's a leader. AMD is a leader. It is just near a new high, and it's been moving steadily higher all year. Texas Instruments did hit a new high, so it's clearly a leader, and it is in a strong uptrend. And then we look at Applied Materials. it's not hitting a new high, but it's got a nice little consolidation breakout. You kind of had this surge, you had another consolidation here, and we held support and getting a breakout there. So it looks like Applied Materials wants to move higher. But again, NVIDIA is the one that is weighing on this one the most. Now there is one more to show you, and that is Xilinx, and it is also the steady uptrend here with Broadcom. You can see a higher low from the summer until October there, a higher low in December when a lot of the other ones are hitting lower lows, held the 200-day on that sharp decline, and has turned back up. So I would expect this one to challenge the spring highs there, and I think it is the second strongest after Broadcom. Now here's XSD, the Semiconductor SPDR, and there you can see it's a much more evenly weighted ETF. There are the top 10 holdings, and they account for 32.88%, much more evenly weighted as far as the semiconductor. So if you want an idea of how the group is doing as a whole, you need to look at XSD. If you're interested in that large cap concentration, then you need to look at SOXX. And if you look at XSD here, you can see that it is right near that high. So it is on the verge of hitting a new high. Like SOSX, it got the bounce off that reversal alert zone there, and the breakout continues to work its way higher. And as long as 84 holds, I think this one is strong. So again, I created a chart list here, XSD top 10, and I'm looking at it in candle glance format there, all the options again. And if I look here, you can see the first 9, and the 10th one is Xilinx. We already went over that one. So there is some duplication here. But if you look at these top ones, you can see that we've got really good strength coming from Infi, Lattice Semiconductors hitting a new high, OLED is hitting a new high. So these are the clear leaders. But I have singled out a few semiconductor stocks to focus on with big charts here. So 3 other semiconductors I think are looking bullish. The first one is Lam Research, and like Applied Materials, it's a semiconductor equipment stock. So you can see here, there's a resistance zone, and I'll give that a redraw here, but there's a resistance zone, and we broke out, and then in early March, it turned into support and held, and we got the bounce. So we got to move to new highs there, and then we have another support zone in that 170 area taking place, and we're getting a bounce off this support zone. If you want, you could draw a little channel down here, and we're breaking out of it, and I think this one is looking bullish. Next up is NXP Semiconductors, and there again we can see a lot of this happening here. Broken resistance turning into support with that March bounce. We got another test in May. So we came down to that level twice. Actually, we have a slightly higher low from March to May. And then you can see there's your channel, if you will. And we broke above that channel. And we're working our way higher for NXP. So I think this one is looking bullish as well. And finally, Power Integrations, POWI. You gotta like that symbol. But it has what looks like a potential cup with handle, in that you can see there's the cup, and we got the little handle forming, and that handle, you know, kind of doubles as a flag or a wedge, whatever you want to call it. But I would look for a little breakout there and possibly a move to new highs. But again, there you can see, and remember this tenet of technical analysis: broken resistance turns into support. So we had this breakout zone, then it became a support zone in March, and we tested it again in May and the 200-day, and that's a strong bounce off that 200-day. So the home builders are remaining strong, and the home builder ETF, home construction ETF actually, ITB, is poised to break out there. But if you look overall, you know, you kind of had resistance and turning into support there, had a little bit of a throwback, if you will, with a falling flag and a breakout. And then we're kind of consolidating in this 38 area, give or take 1 to 1.5 points. But I view it as a consolidation after this sharp advance, and I would expect a continuation higher for home builders. And if you look at RSI has been holding that bull zone from 40 to 80 since January, the middle part of January when it almost hit 70. So RSI is in its bull zone. This one's showing some upside leadership, and then it just edged above that high in July there, above that June high. So I think home builders are still attracting buying interest. And if we look at some of the stocks, here is DR Horton. And we can see that it's forming a consolidation within an uptrend. So you had the big move up. There's the big move up. And then this kind of consolidation. And I'm watching for a breakout and a continuation higher for DR Horton. You look at KB Home, a similar profile here. You had a resistance zone there that was broken, and you kind of came back to that resistance zone there in March and moved up again. We had a pretty deep throwback in June, but look at that gap. All right, that's a nice looking gap and a surge. And now we're kind of consolidating just below 27. So we need to get a breakout there to get this one back on the upward trajectory. Then we look at Lennar. Now this is clearly the weakest of the groups so far. As you can see, it fits the pattern here in January with the breakout, and March with the return to the breakout zone. And you can see the little pullback here, kind of a wedge. But look at that hit that DR Horton took. Now, admittedly, it is coming into a potential support zone in that 46, 47 area. You can see from these lows in March. So because the group is strong, I would still watch it to see if it can recover and get a breakout there. So Lennar and DR Horton are the two biggest stocks in this ETF, and they're the main drivers. Here is MI Homes, MHO, and we can see that it's got an ascending triangle possibly working there. There's the resistance zone and some higher lows. This is a bullish continuation pattern, and a breakout there at 30 would be bullish and signal a continuation higher. Then we look at Meritage Homes, MTH. It is one of the leaders because it already got its breakout and a new 52-week high. So we can first see there's the initial breakout in January and the throwback, another surge and a little consolidation, and then we have another surge to a new high. So Meritage is clearly leading, and Pulte is also leading. And the reason they're leading is because they're hitting 52-week highs while the other ones have yet to hit 52-week highs. So Pulte was kind of consolidating after this advance, and it looks like it's trying to break out and continue higher. And last but not least, we have Toll Brothers here. And Toll Brothers is stuck in a consolidation here. You can see that broken resistance turning into support. So it was looking okay when it was working its way higher, but it got hit really hard like Lennar there. So right now it's in consolidation mode, and we're going to see if it can break out of this consolidation. You have a clear resistance level there at say 37.5. And if we can get a breakout there, that's going to be a bullish development for Toll Brothers. So for the individual stocks that I'm going to show you here, these setups that I like, I'm going to work off of the StockCharts ACP Advanced Charting Platform. It's stockcharts.com/ACP. And it's a very intuitive and easy to use charting platform where you can just enter a symbol and put on your indicators and do your analysis right then and there. So what I'm doing is I've got the ACP open here. It's the default. I'm going to click Got It here. Notice when I scroll the mouse wheel, I can expand or contract the chart. So now I've got a chart going back well over a year on the Dow Jones Industrial Average, and you can see that new high. I'm going to go ahead and set up the indicators how I like them. You know, I don't need too much on a chart. Personally, the only indicator I need is RSI for pretty much everything. Now over on the left, you can see I've got a little trash can, so I can remove MACD. I can hover over these moving averages and remove them as well. I'm going to leave the 200-day there, so I just click the trash can there. For chart type, I'm going to go to open, high, low, close bars. The period setting, I'm going to leave at daily. Duration is fine because I can use that nifty little mouse wheel to go in and out on the date range here. So once I'm set up, I can click this collapse sidebar button there. So now the first chart I want to show you is ALGT, which is Allegiant Travel, which is of course the airline stock. And a lot of people have been focusing on airlines lately because they are breaking out. Now, I'm not that big of a fan of airline stocks in general because they're really finicky stocks here. But the first breakout there was in January, and then we had the pullback and a surge, and we had the second breakout in March, and then we kind of consolidated here, and now we're getting another breakout there. So airlines appear to be getting some lift, if you will. Now, the next one here is Cree, and it comes from the Semiconductor Group. And what caught my eye was it's at a potential reversal alert zone here. So what we can see is first you had a resistance breakout there, and we came back down. We didn't quite get to the breakout zone, which turns into support. We found support a little higher there in that 55 area. And so we've been firming for quite some time. And, you know, this is a 52-week high. And whenever I see a 52-week high and whenever I see a sharp advance, let's kind of clean up that chart a little bit. But look at the steepness of this advance to a 52-week high. You can expect a pullback. All right, we got the pullback. We're getting a lot of support around 55 and starting to bounce off support. So I think Cree is looking bullish. Now, the other one is the funniest symbol ever, FWONK, which is Liberty Media. I don't know why that symbol is the way it is. I'm sure there is something to do with the corporate sayings or logos or what have you. But looking at this chart here, you can see it is on the verge of a pretty big breakout there. There's a big resistance zone, and then we can see that there is a bull flag taking shape. Let me remove that. There's that bull flag taking shape, and it is broken out of that flag. So it looks like Liberty Media also wants to move higher. And that concludes this edition of On Trend. Thanks very much for tuning in, and have a great day.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Raschke, and Ralph Atkampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.